Okay, so rule number one, we need volume. Rule number two, once again, you could argue the most important. All three rules very important. You must know all three, follow all three, okay? Number one, volume. Number two, we only buy the break of resistance. For example, a certain stock is up 20% on the day, okay? Now, all these little charts I draw are line charts because I can't draw candlesticks quickly and efficiently. You should be watching candlesticks, obviously, okay? This is just for demonstration, okay? So it comes up, it hits 50 cents, okay? It's on your radar now, okay? It pulls back from 50, it doesn't break it, okay? That's actually a good thing. This is a good sign, okay? That stock just showed you where resistance is. Remember, resistances are built in, okay? Under 50 cents, you're looking at 45, 40, 35, okay? The day before, if it hit 40 and that was the high of the day, that's another, let's say it was 42, okay? You need to look into the stock you're going to buy quickly, okay? Because if you have resistance at 42 and it's having trouble getting through 40 right here, it might get shot down right here at 42. If you buy the break at 40, you might only make 2 cents, okay? So your better bet right here would be to wait for the break of 42, okay? But back to this. This is a pullback, okay? This is good because the stock just showed you a resistance. Hey, I'm having trouble getting through 50, okay? And this might sound dumb, but what does a stock have to do for us to make money if we're going long on it? It has to go up, right? And for a stock to go up, it has to break resistances, or it's not going to go up. How many plays have we seen already where the stock hits the resistance, we say, hey, over 50, that's a good play, and then it hits 50, and bam. Hey, we don't have to trade it now, So a pullback is good. Not only does it show you the next resistance, but the people that made money from down here, they're leaving, okay? And you got new people coming in, hopefully, okay? Right here's your volume. You're going to have big volume right here on the right up. That first sell-off is going to start going down, okay? That's what you want to see. When the selling is going, you want the volume going down. You don't want tons of volume here on the sell-off, okay? You want little volume. And then when she starts perking back up, okay, you're going to see volume coming back in, okay? So we want to buy the break of 50. So how do we do that? We don't buy it. We don't send a market order out when it says 50 is the price, okay? We buy when the bid breaks the resistance, okay? So you get a bid of 51, that's your sign, okay? Now even better yet, if you see the bid of 51 and then the next guy is a 49, a 48, that's questionable, okay? Because if the seller sells to this guy and takes him out, guess what? You're right back down to 49. Remember, a stock is only worth what somebody's willing to pay for it, okay? So what you really want to see on the bid, but if something's moving real fast, you're not going to have time to see this, okay? What you really want to see is a bid of 51, a bid of 51, a bid of 50, a bid of 50, okay? That means people want this stock over this resistance, okay? That's our sign to get in, okay? So we buy the break of 51 right here, and boom. Remember? All we want are breakouts. These are breakouts. Tons of volume, breaking resistance, these shoot up, okay? So as soon as you have your shares, we'll get to that in the next lesson, okay? Break of resistance. Now that doesn't mean it always has to be the high of day, okay? Like I said earlier, let's say that yesterday's high for this stock. My marker's dying. Let's see if this one works. Let's say yesterday's high on this stock. Really? Let's say yesterday's high on a stock was, we'll go with 65 cents, okay? We'll say that yesterday's high was 65 cents. It comes down to 50. You don't think it's worth buying yet. It comes up right here. You can buy that. You can buy the break of 65, okay? Here was your bottom. Let's say the bottom was 50, okay? You know resistance is built in every 5, or if the chart showed you, if this comes up, hits 55, and gets beaten back by it and consolidates, you have a good entry right there at 55, okay? If this breaks 55, you're bullish, you're going upwards, okay? We only want to buy bullish stocks, stocks that are going up, okay? We're not buying dips. How many times does somebody say, oh, it'll bounce off 60, I'm going to buy 60. Oh, it'll bounce off 55, I'm going to buy 55. It'll bounce off 50, I'm going to buy 50. You have no idea where the bottom is, okay? We do know where the top is. On this one, the top right now is 55 cents. We know that because the stock hit it, couldn't get through it. This is now a resistance, okay? And the stock is trending upwards, okay? It's bullish, okay? Over here, the stock is bearish, okay? Don't guess where the bottom is. A lot of traders lose money guessing, okay? Now, if you want to play it safe, wait till the break of 65. That might not happen, okay? But for it to get to 65, it's got to get through 55. So you can buy that break of resistance right there, okay? You get the bid of 56, and you can get in, okay? Now, at 60, you're going to have resistance, okay? So expect this to come up to 60, and if it doesn't blow right through it, you're probably going to get some pullback, okay? Now what you can do there, you can either sell into the resistance and then wait for it to break 60 and get back in, or you can, you can ride it out, but be ready to sell your shares. Don't let it come back to where you bought it, okay? So going off that example, let's say something's up big pre-market, okay? It's 50 cents. It's 50 cents to start, hits $1, okay? Comes all the way down to, we'll say all the way down to 70, okay? Starts curling back up, okay? You had all your volume right here, volume died, you see volume start picking back up, okay? Comes up to 80, okay? Gets whacked by 80, doesn't break through, okay? Consolidates. You now know 80 is resistance, okay? And you're going to start, volume dies again because people are selling, okay? It starts curling back up for 80. You see a big spike coming. You get that bid of 81, okay? Boom, you're in, okay? Now beware, because, you're going to have resistance at 90, $1, okay? Especially at $1, because that's the high, okay? But you can sell and wait to get in on the next break of resistance, okay? So we don't dip buy, we don't swing, we don't buy and pray. Momentum trading is all about trading stocks with a lot of momentum, okay? You don't have to buy the break of the high of day. You need to find a good resistance point to base your entry off of. Because if you look throughout the day, stocks that go up a lot, look at all the resistances. Look at 0.60, look at 0.70, look at 0.80. If it's breaking these, look at the volume when it comes to these points. These are where smart traders are buying, okay? Smart traders are buying at resistance, okay? They're 60, 70, 80. Anything in between these points, you should not be buying. This is no man's land. You can't read that, but that says no man's land, okay? That's where rookie traders buy. Oh, this stock's going up, I'm buying it. And then it goes right down when they buy it, right? Everybody's done that. No man's land. Okay? Do not buy in between resistances. Or these are supports on your way down. We don't buy at support because you don't know that it's going to support it. But you do know when it breaks through that it broke through. Okay? So rule number 2. We only buy breaks of resistance. Okay? We're trying to buy breakouts. That is the goal of this method, is to buy breakouts. Okay? So when you buy the break of 50, okay, what you want to see is room, you know. You want to see tons of volume come in and push that stock up higher. Okay? That is what we're trying to buy every time. Every trade we take. Okay? That's why we need volume. Because to do this, you need volume. So rule number 1, volume. Rule number 2, only buy on the break of resistance.